Greetings from Geojit Financial Services. As the world awaits the final outcome of the US presidential elections, we have the biggest IPO of 2020 so far opening next week. The IPO of Gland Pharma, a Chinese-backed company focusing on injectables and which is headquartered in Hyderabad. This issue basically constitutes an offer for sale by the promoters. Geojit Financial recommends a subscribe rating on this IPO for investors only with a long-term perspective. Let us now look at the factors that have influenced this IPO recommendation. The company has an attractive business model, a B2B business model for marketing its products globally and a B2C business model for marketing its products in India. The B2B business model accounts for almost 96% of the total revenue from operations and also ensures costs and EBITDA margins are stable. The company also has facilities which account for the entire product life cycle. It has an R&D focused research, which means that strong product launches and product approvals are in place. It also has 3 API manufacturing facilities and 4 product manufacturing facilities. The biggest risk for any Indian pharma company is basically the warning letters or notices issued by the US FDA. The company claims that none of its facilities since inception has received a warning letter from US FDA. The financials of the company is also very robust. It has exhibited stable CAGR growth in terms of revenues, operating profits and net profits. It has shown consistent increases in return on equity and return on capital employed and is also almost a zero debt company. So the financials and the balance sheet is also robust. Now, looking at the potential of the pharma industry, all of us know that pharmaceutical sector is supposed to be defensive in nature. In spite of the pandemic, the pharma industry has maintained its stable outlook. The injectables industry within the pharma industry is also projected to grow at a faster pace than the entire pharma industry as a whole. So the company business, the way of doing business and the potential of the industry are all positives for this IPO. Looking at the negatives of this IPO, you can say that the top 5 clients accounting for 45% of total revenues or US accounting for 66% of the total revenue from operations can be a concern. But US is supposed to be the biggest pharma market and it is more or less acceptable for pharma companies to have a higher exposure to the US. The India-China relationship can have an impact on the supply chains, not only for this company but for the entire pharma industry. Specifically to this company, there can be a sentimental risk since this is backed by a Chinese promoter. The US has also been cracking down on Chinese companies and this may lead to pricing pressures or delay in approvals. But we feel that this strain in relationship will have more of a sentimental impact only on the prices and not a material impact on the product revenues. Now coming to the valuations of this company, at the upper price band of rupees 1,500, the company is at a PE of 20 times on the basis of FY20 earnings and a PE of close to 20 times on the basis of annualized FY21 earnings. Now this is at a discount to its global peers, but we cannot compare it in a domestic situation, in a domestic scenario, because there are no listed peers for the company. So we cannot say for sure whether it is trading cheaply or whether it is trading at a expensive valuation. But it is close to the actual, when we look at the average pharmaceutical sector PE, it is close to the average PE of the pharmaceutical sector. So it might look fully priced in, but we also need to note the fact that the injectables industry is expected to grow at a faster pace than the pharmaceutical industry as a whole. So overall, when you look at all these factors, considering the diversified business model, considering the potential of the injectables industry, considering the product portfolio of the company, and also the robust financials, we have recommended a subscribe rating for this company with a long-term perspective, setting aside the anti-China sentiments. Now, investors would do well to note the post-listing performance of the previous few IPO since it has subsequently underperformed post the listing day. For more details on this IPO, you may refer to the IPO note published by Geojit Research. Thank you and happy investing.